Welcome to Revere Asset Management's Your Money with Danny Stewart
The market will always overshoot to the downside and to the upside.
and Don Vandenbord.
Because it's not how much you make in the markets, it's how much of that you can keep.
The IRS just had their reveal party for 2025 with new rates and new deductions. We'll go over the highlights in just a minute. And the CFP board has said uncle and come to their senses. They finally admitted that their own CFP alumni, their brethren, do not want lazy couch potato stoners to be their next up-and-coming advisors to take their place. And in fact, the clients of the CFPs, the clients of all these people also didn't want lazy couch potato stoners to be their advisor. Who knew? Well, now the CFP knows. So in any event, and do you need help avoiding the crocodile jaw situation with your money? We're going to talk about that in a real world situation with Tesla. And speaking of Tesla, what a difference a day makes. Boy, Tesla was a dog to a leader overnight, rags to riches. And if you owned Tesla this last year, you got crushed. Man, what a difference a day makes. And folks, listen, if you're just joining the Revere podcast for the first time, we did a show, the last 6 or so shows, I did these AI poems with famous American hero speeches. We had Paul Revere, our namesake, The Bear Markets Are Coming, but when? Thomas Paine's Common Sense, Patrick Henry, Give Me Investment Freedom. And then I kind of went off from the founding fathers and did Honest Abe's 45 4 stocks and 7 sectors ago, and then MLK's I Have an Investment Dream. They're kind of fun and they're cool. So if you missed them, go back and listen. They're on our website at revereasset.com. All right, now, very quickly, the IRS just came with a reveal that the new standard deduction is going to be increased up $400 to $15,000. It's joint. It's going to be $30,000 total, or $800 increase. Marginal rates are relatively the same. The highest 37 with the highest bracket is 37%. If you're over $97,000 jointly, you're at the 22% tax bracket. You're at 22% just at 48.5 individual rounding. So essentially, you're giving a quarter almost, over 20% of all your money to the government. Folks, the problem is not taxes. It's not, quote, revenue. I hate when they say revenue. Whenever they use the word the governor uses the word revenue, say your tax dollars, your money. That's your money. They need to spend it wisely. It's the spending is not taxes are not the problem. Revenue's not the problem. Spending is the problem. Now, lifetime exemption to give your estate away is $13.99 million, just call it 14, up from 13.6. And the annual gift you can give to anybody you want, including me if you love me, is $19,000 a year, up $1,000 from $18,000. Now, on those lifetime exemptions, this is very important. This is important for people that are fairly high net worth. These tax rules are going to sunset in 2026, January 1st. So the annual lifetime deductions you can give away right now, you can give away $14,000 each spouse. So you can give, if you got your wills or trust done, revocable trust done right, you can give away times 2. Well, that's going from $13,000 down to about $6,000, or cut in half in 2026. So if you need help, if you've got some high net worth, just call me. I'm very well versed in estate planning. Okay, and then lastly, we talked about Tesla, and so I'm going to go directly to the mailbag, okay, because this is very apropos to not only our overall Revere strategy, how we manage money generally, but also some specific positions. This is a great setup for how we do it. And by the way, folks, the whole point was, how do you avoid a crocodile jaw crushing you, some stock just absolutely obliterating your portfolio? And on the flip side of that, how do you know to get back in when the dust is clear, whether the bear market, whether it's across the board or with individual stocks? So with that, I'm going to go to the mailbag. And folks, if you got any ideas or you want a complimentary portfolio review, or you want me to talk about like this topic I'm going to in the mailbag, or a specific stock, there's a contact us button. Just go in there and hit it, and it'll send me an email, or you can send it directly to me, dan@revereasset.com. All right, now to the mailbag. This is on 10/23. This is from LR. Adding funds had a nice run up, so don't deploy until we get a pullback. And actually, I had some client say, don't do anything until we get a 10% pullback. Folks, I get this all the time. It's a round number in their head that makes sense. Okay. And that's a emotional response. And especially when clients add deposits or larger deposits, like if they're doing their annual retirement contribution or they're transferring money in. So, and this is a client of mine. I know him very well. I've had him for years. He says this every time he adds money, and I answered him back. I was very direct, very honest. Call him on the phone too to explain it. Okay, that is an emotional response and a bad idea. We will certainly have a correction at some point, and even another bear market, but it could be from 30% higher from here, thus giving away 20%. That is why we have buy and sell rules, and don't act on emotions or politics. If I invested the way I felt, I wouldn't be up 20% plus this year, and neither would you. Only be up 8% or so, because I would have moved to cash in the middle of the year when it got choppy, and then I probably wouldn't have gotten back in. Okay. I will say, though, that these past few weeks before the election, markets historically pull back and then rally once the election over the uncertainty is removed. We'll see if the uncertainty is actually removed this time. But again, that's why we follow the charts. There is an old adage on Wall Street: the market climbs a wall of worry. Folks, Don's got that great quote: more gains, more losses have occurred by trying to miss the bear market than the actual bear market itself. Remember that. That's why you can't base your investing on feelings or emotions. Think about your doctor. You want him to base your medical decisions on your feelings and emotions, or do you want medical labs and blood work and data? It's a good point. All right. So I said, do you know how much the markets have climbed since you and I have been harping on our country's significant problems? I don't know whether that's a signal of our strong markets, meaning the market going up, or the weakness of the dollar, but it doesn't matter. The markets are wanting to move higher, but if they fail, you will be sold out into cash. We have the same conversation every time you add money. I'm scared enough for both of us, but I completely understand your concern. Quote, I'm scared, and did you make me money? Or did you not lose a big amount during the next sell-off so we can compound from a higher basis? Folks, we do this using all kinds of math, probabilities, and rules. We do not haphazardly buy and sell, have a buy and hold pie chart approach. We dial up and down the risk on a daily basis, and our long-term 5-year annualized is 13% with zero bear markets. Zero. Okay? That's the key right there. Okay? Because the S&P is right in there too, but you also got to go down 35%, 28.5% in 3 weeks. In less than a month, twice, you lost almost 30% and then over 35%. So that's just, what would you do if that happened? You got to ask yourself that. All right. You should start watching our nightly videos so you can actually see how meticulous we are about protecting principal. They will allay some of your fears. I know you were too busy to pay a lot of attention. He's still working. But if you watch a few a week, it will help offset all the political nonsense, all the stuff you're hearing in the news, and all the fear. And then I have a note to me, explain the homogenize and stop loss or whatever. Folks, very quickly, when someone transfers in, okay, when someone transfers in from Fidelity or Merrill Lynch or whatever, right, they've got their own stuff. Don immediately goes through there and goes, dog, 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 sell, sell, sell. These two are within buy. These are still look good, these two securities he holds. Here's where I would put my trailing stop. Now, when I say trailing stop, we don't actually use hard stops because the market makers know where those are, and they actually go rape retail investors all the time. So we actually use alerts. We know when it hits our quote stop, it sends us an alert, and then we figure out what type of order, limit, VWAP, market, whatever, to put the trade in. Okay? So when I say stop, just know that I'm talking about that. In any event, So Don will look and say, these 2 stocks are pretty good. Here's our trailing stocks. Here are our stocks. These 3 are on profit watch. Can't have those because they may get sold. This one's about to get stopped out. If it doesn't firm up and we still like it, he can't have it yet. It's got to firm up and he's got to still like it. These 2 are still within buy range. Boom, he gets those. And from there, he is in any new buy that all the clients get at the block level. So when we buy something, you get it at the exact same price and time stop as Don, me, and my 92-year-old mother. Everybody gets the same average price and timestamp, no cherry picking. The whole point is he may get 2 weeks to get assimilated, or it may take 2 months. It actually depends on the market and the volatility of the market. It's not, in the brokerage business, it's the changing of the investment business. It's not the investment business. So when you transfer in, they liquidate and sell out, you out completely 100% lock, stock, and barrel, and then they buy all their products. We don't have products because they don't get paid unless you own their pie chart, unless you're in their funds. We don't do that, okay? So in any event, and then we have individual stop losses for every stock. It's got its own unique stop loss, a stock, because it's got its own, based on its volatility and average true range. So a real volatile stock may have a 12% stop under it. A stop that's kind of middle of the range may have an 8%, and then you may have a 6% stop on another stock. But that would have a larger position size. So Don actually kind of standardizes each stock so that the one that needs a bigger stop loss has a smaller position size, so that any stock that gets hit has the same dollar or percentage hit relative to the total portfolio. Are you doing that with your money, or are you just buying haphazardly and putting a 5% stop automatically because you read some book that told you to do that? Folks, that's retail investing. That's a rookie move. You're going to get burned. Anyway, all right. So with that, I think I'll go to the next one first and then go to you, Don, because I think you can wrap this all up together. So that's kind of the broader big picture market assimilation and how we manage. And then I'm going to go directly to this Tesla, because this is very apropos, and this is an inflection point on now a leading stock. It wasn't just 3 days ago, and how you would play that. Okay. So this is 1025. This is just yesterday. This is GJ. Full disclosure, he is a client. He's a very smart engineer, and he follows Tesla like a hawk. He loves Tesla, but he knows that price is truth. All right. He clarified it for me, because we've taken a few barbs back and forth, traded back and forth. It says a day after Tesla earnings and tracking Tesla. This is my notes. Day after Tesla earnings, tracking Tesla, engineer who loves Tesla. He sent me this newsletter from Beth Kindig. It's newsletters at io-fund.com. It's IO fund. It's a ETF fund, whatever. And they actually are a growth fund, and they're putting out a newsletter regarding Tesla. Now, here are the highlights of that article. I'm not going to go over the whole article. Margins bounce back. Deliveries recover. Revenues don't. Profitability improved on cost optimizations. Q4 margins challenging to sustain. That's their opinion. And robotaxi's not here despite numerous timelines. And then the conclusion. You can go, and this is the conclusion. Despite a mixed Q3 earnings report featuring a revenue miss and an EPS beat, Tesla's report exceeded expectations in areas that mattered most. Margins. Auto gross margins rebounded due to production cost improvements, even as selling prices fell. So their cost dropped more than their sales price, boosting operating margins back to the double-digit range. That's big. Okay. While the AI story is the one to watch, margins have been behind-the-scenes driver for shares and remain the data point to track until credible, tangible revenue streams from robo-taxis arise. IO Fund PM Knox Riley on August 23rd as the IO cut our Tesla position after a gain. We were avoiding the crocodile jaw situations when the stock price is going up, but fundamentals are decelerating. Folks, that's what we look at here. We're looking at, is the stock market going up, but what about advanced decline line? What about the internals? Or is selling volume increasing? Or are the internals of the market starting to roll over and deteriorate while prices are going up? That's what this guy's saying. in any event, that's a good letter if you want to read it. So this is good morning. This is him. Good morning. Interesting take on Tesla. FYI, I did not hold any shares as it was falling in price. Did start buying back October 10th with TSLA, which was too aggressive with a small ETF buy. Then got pretty aggressive after hours on earnings. This is yesterday. Noting volume on TSLA yesterday, that's the 1.5 times Tesla ETF, got an IBD balloon for record daily volume, meaning Tesla had massive volume. Seems she didn't like the comment that Tesla is now offering ride-hailing rides to employees in California with safety driver in place. Hence, they are doing what is needed by regulators to prove up the software and gather safety data. This is the key to me. It seems to indicate they do not need a partner with Uber Lyft for the network and will still have their own solution. He's talking about how the cars actually, the software that makes them run in the navigation system. They don't need to tie into that whole system. All right. Where did I go? I did not need to partner with this. That was previously shared by an employee on X, the old Twitter. She was the first demo ride person in over a year ago. Musk also commented lower price models are coming out in the first half of 2025, expecting the refreshed Model Y. They will roll out at a lower cost, starting selling non-foundation Cybertrucks this month. I am focused on Tesla and ETF TSLA, and several of you also track this stock. Don said, thank you for sending. We will discuss. Folks, I know that kind of slowed down the show a little bit to read that, but I'm setting this up because Don is going to explain, I hope, how we snuck into Tesla after the big earnings report and the pop. It gapped up big. And so how do you get in and how do you manage that on a big gap up? And then obviously what the overall markets are telling us. So Don, with that, baby, bring it home. I set the table for you.
Sure, Dan. A lot of good information in there, both about Tesla and about our approach. You really covered everything about, especially how we assimilate new clients. I know the typical advisor would just, regardless of where the market is, whether it's extended to the downside or extended to the upside, just get their pie chart, click their submit button, and allocate everything without any thought to the technical state of the market. And that's really what separates us from other typical advisors. So what we're looking at here is a daily chart of Tesla. And let's go back to 2 earnings reports ago. They gapped up on earnings, but it wasn't sustained. And a couple things were going on here, but the market was uptrending, but this pop in Tesla was sold, and it then started to form a new base. And then a couple of weeks after earnings, Elon came out and announced the big robotaxi event was supposed to happen. And Tesla really squeezed to the upside. I don't know if squeeze is the right word, because this isn't a squeeze that's going on right now. The short interest in the stock is only 3%. I'm not aware of what the short interest was back then, but there was a lot of euphoria, broke out of a pretty nice base above this 200 level, ran very quickly up to the 270s. And then started to go sideways a little bit. And then they announced earnings. And those earnings underwhelmed. It gapped down, tried to rally back. And then they announced that they were delaying this robotaxi event. It was initially supposed to be in late August. They said they were delaying it to October. And it sold off again. Started to try to work its way back to the upside. In fact, and this was a lot of this was on the optimism about the robotaxi event, which was early October, and started to form a very nice cup, started to pull back in the handle, but then they had the robotaxi event right here, and it completely underwhelmed, gapped down, a classic sell the news situation, and really sentiment about Tesla with this disappointment with the robotaxi event. Sentiment was extremely weak on it. You can see the big selling. Then volume dried up as it was waiting for its earnings report. And the earnings report was not expected to have the response and the numbers that it did, but you can see the massive gap up on volume, up 22% yesterday, and it initially gapped from its close to about $230. Then the conference call started, and Elon really started pumping the future for them, giving some more information about what was coming, and people started buying it with two hands. It was up to the 240s after hours, and the following morning. It gapped up and put a low in immediately at 242-ish. So let's go to a 5-minute chart here so you can see what was happening with the gap up. Putting in the low immediately is extremely bullish after you have a big gap up like that. So that we were discussing getting into it on our morning conference call because we could see the morning strength and the volume that it was having pre-market. But until the market actually opens and you can see whether or not there are buyers there, sometimes things get pumped up pre-market to just dump. You see it all the time. That wasn't the case here. There were buyers. It ran up to the 250 area, which is kind of considered, a Livermore area, the round numbers like 200, 300. But anything with a 50 is also considered a natural spot to pause as well. We did our first buy as it was approaching that level. It put a nice little sideways action flag in as volume decreased, and then it blasted above 250, hung around 250 for a little while, and then there was really buying the rest of the day to the upside where it closed up. We did another buy in here when it broke above, convincingly above that 250 level. After hours yesterday and overnight, it sold off a bit, but look what happened immediately this morning. It was bought right out of the gate. It made a higher high. We added again over that higher high. So this is our second largest position now. Actually, our third largest behind BRT and NVIDIA. Ran up a little bit euphoric to 270, pulled back to 260. And you can see it wouldn't surprise me if it just goes sideways here for a little while, but it also wouldn't surprise me if it just blasts higher. We're open to all options, but you can see where it ran here. This was just on the prospect of some of this robo-taxi event where it ran from 200 to 270. Yeah. This now actually was an earnings report, and words that I know Elon tends to have. I don't think a single one of his deadlines have ever been met when he says something's going to be ready. But he talked a lot about the future. They also talked about how they're really starting to generate some revenue from their power wall and power storage, solar to battery storage. So they've got more than cars going on. But ultimately what happens, everybody's got a story for their stock, but ultimately we had a higher high on the day two. That's bullish. We broke above the high of this handle and the cup and handle. That's bullish. We're coming into this 270. Today's high on the stock was 269. So we've got a little bit in this 270-ish to overcome. And then if you step back a little bit and look at the weekly, this has a lot of room to run. The high in the stock back in December of 2021 was, now I know there have been splits, but was 414. So yes, they have to deliver. Yes, people have to keep buying it, but hedge funds and the big pension funds, because of some of the uncertainty around here, first of all, they don't like a stock dropping 30% in 4 weeks when you have earnings report and you're trying to keep up with a benchmark. But there are a lot of the bigger funds that are underweight this, and it looks like they're playing catch up yesterday and today on the earnings report. And ultimately, we look at price and volume, and that's what tells the story, because as I said, that tells the truth, not the story. Everybody's got a story. Price and volume are the only true things that you can hang your hat on. So this is looking good. Like I said, we've done 3 buys on it, and it's our third largest position now. We'll let this settle a little bit, see what happens. But Tesla, if anybody knows, can go on these really massive runs in short periods of time. And that certainly factors into our decision of whether or not to take a position in this, because we've seen what it can do. Very often stocks gap up on earnings, then they go sideways for 3 months, and then they'll gap up a little bit on their next earnings and go sideways. And there's not an opportunity to really make money unless you've been in something. And we're big relative strength junkies, and we're just not going to stay in something that's relatively weak when there's other stocks that are working in the market, not to mention the indexes themselves that continue to make higher highs. So that's the Tesla story. Now let's go to the indexes.
Well, but real quick, Don, I would like to mention one point, because folks, this is behavioral finance. This is emotions getting in your way. So think about it. Tesla's been a dog for a year. In 2022, I think in 2021, it was the leading darling of Wall Street with a couple other stocks. And it was the biggest runner. In 2022, it was down 69%. It got slaughtered. Leading stocks on average, when they fall either in the next bear market or just that own stock sells off hard, leading stocks fall on average 72% from the top. People don't realize that. So that's one thing. Number one, how do you have a sell discipline so you don't get creamed? The second thing on the flip side is most people, behavioral finance, Tesla gapped up literally over 10% at the open. Most people go, oh my God, I missed it. I can't buy that. Not true. If you've got rules and probabilities, and you can see the probabilities of the likelihood of success, and then the likelihood of failure if some things change. So when you buy it, you still have a plan to not hold it if it doesn't work out. But how do you get in? Most people would just pass. They would say, I can't do that. I missed it. I missed it. No, you didn't. It may be very early. Your brain will tell you, oh my God, it popped up 15%. It's too late. I missed it. It could go up another 50 or 100%, folks. You have no idea. You just don't. That's your brain telling you how to lose money. Okay. And listen, it's the same thing for me. I saw it pop and I'm going, oh my God, we missed it. And then Don started buying. I'm thinking, ooh, gosh, that's kind of nerd. It's already up 12%. It closed up 22%. We got a nice gain. We wouldn't have had that gain if we were afraid to buy it. It makes it a lot easier to buy if you have a sell discipline and you know exactly where you would sell it before you buy it. If you don't know where you're going to sell that security, where your stop is before you're going to buy it, you're a retail investor gambling. That's just the way I feel. That's my opinion. All right, Don.
Well, that might be your opinion, but it's actually fact too. All right, so let's.
But you know what I mean about how many people will miss it. If a stock pops, they will not buy it. And one of Bill O'Neill's favorite lines was, "You want to buy high and sell higher." Most people have this idea they want to bottom fish or they want to buy after a big pullback. Folks, there's an old adage: it's junk off the bottom. It's not bottom fishing. You're fishing for trash, junk fish. Okay, it may take 3 years for the market to recognize that they have value to come up. They may not. That's why you want to buy stocks that are actually showing relative strength and showing interest right now. And if they don't work out, trade them out for something that is working. Like we say always, it's okay to be wrong. It's not okay to stay wrong. All right, Don, I'll get off my bully pulpit. Go ahead.
Yeah. So going back to the indexes, the S&P 500 had been the leading index as several of the big, the Magnificent Seven stocks have had a couple of issues. Obviously, the weakest one we just showed was Tesla prior to this earnings report. So the S&P 500 was making higher highs, but the NASDAQ 100 was not. Now, something changed this week. You can see the subtle relative strength line here on the NASDAQ 100 starting to go higher. This is the QQQs. Now, still not at an all-time high, but it has made a high relative to the high of the beginning of last week. So the NASDAQ 100 surpassed that, while the S&P 500 didn't. Okay, so something else that's happening at the same time is here's the equal weight S&P 500. This is even weaker, and you can see the relative strength line turning down here. That actually started at the beginning of September. It started to lag the market cap weighted S&P 500. And a lot of this is because of the this unfortunate chart right here. This is the 30-year yield. With the Fed cut rates here, the expectation was that rates would come down across the board. They haven't, even all the way down to the 2-year rates have risen since the Fed made its cut. So rising interest rates are toxic to growth stocks, especially the smaller end ones that have a lot of debt. The big Magnificent Seven have pretty pristine balance sheets, so they're not affected as much. And that's what you've been seeing over the last 2 weeks in particular, is weakness in small caps. We loved this setup right here just as early as late last week. It shot up. It went sideways tight for 2 days. We were looking, our expectation was that small caps were going to break out of this flat base and make a higher high, but we had some big ticks up in yields over the last week. They pulled back hard. Our expectations changed from these being a potential lead to these being a laggard just in the course of a week. And now what we're seeing here, you can see the relative strength line here, about a week and a half of weakness. What's happening is the 8 EMA and the 21 EMA, those are our ultra short and short term, have rolled over and are acting as resistance to these names. So what we need to see is for rates to stop going up, obviously, for small and mid caps, especially from the growth pond, to even have a chance. But 3 days in a row, these ran into resistance at the 21-day and now the declining 8-day moving average, which is angling to break below the 21. That's a bearish occurrence as well. And we're actually looking at these as a potential short. Our expectation is that money would continue, if interest rates continue to climb, money would flow into these big NASDAQ 100 stocks. We talked about it earlier in the week in our nightly videos. We had a big shakeout on Wednesday. Ted talked about the line in the sand. Let's go to the S&P 500 chart here, and you can see these levels that we've been talking about. We had this clean breakout here on October 9th. Then we started to make a higher high, and then we had a big shakeout on Wednesday. But we closed strong. We undercut this 5770 level, was then the line in the sand that corresponded really over here to right where we broke out. And this is technical analysis 101. We tested the pivot, it held, and we started to work our way higher. So good stuff here. We're pulling back a little bit off of the highs, but where did we pause this morning when we were rallying after the gap up? Right where the highs of this range are. So for now, this 5863 to 5878, a 15-point range, that is the top of the current range, and it's acting as resistance today. Had been acting as resistance 3 days ago before we had the sell-off. So we're looking to get above that area for another clean breakout and a higher high. On the downside, as long as this 5770 holds, we're in good shape. We're really looking for today's lows to hold. Those correspond 5810 to 5820, which had provided some support last week. And when we first started to get moving, you can see just one quick undercut here to 5804 before trying to make higher highs. So really, we're in a range. 18 days now since we moved higher. Line in the sand pretty much established for, we're very, very long right now all across the shop. That a break of that level is something that would start to make us pull back a little bit. And we're switching our focus away from small and mid caps while interest rates go higher. If we get a pullback in interest rates and also the dollar has been stronger than we'd like, that's a typical headwind for stocks. You can see virtually the same chart as what yields are doing. This is a headwind for stocks also as well. And also for precious metals, not as much lately because gold has been a flight to quality. But these are the things that we watch every day, discuss them in the videos. We just take it level to level, no predictions. The market is acting bullish right now, so we're bullishly positioned for our clients, but we've always got one foot out the door should these key levels start to break. The green line, the 21-day moving average, undercut and held perfect. Tested again yesterday, held. That's perfect. Now breaking above with this morning's gap up. Good stuff there. If we start to break these levels, we'll start to get more defensive, lock in our profits, pull back on buying until things get to where we firmly feel that wind at our back, which the wind shifted a little bit on Wednesday, but got right back. Thursday was a confidence builder because it tested that level again and we survived. And now the gap up this morning, and Tesla earnings seem to light a bit of a fire under these NASDAQ 100 growth names. And as we know, those can carry the market, put the market on its back. There was a lot of talk about how those Magnificent Seven was the only thing that was going up and the other 493 stocks were crap.
Yeah.
And that was the case for a while, but it wasn't the case as soon as 2 weeks ago, Dan, where the NASDAQ the RSP made highs along with the S&P 500. But now you can see the subtle relative strength going down, and that corresponds with increased relative strength of these big NASDAQ 100 stocks. That's about where we are. We're riding the wave. We almost fell off the wave a little bit on Wednesday, but we didn't get stopped out of everything. And that really is a testament to, first of all, having solid stops, also having proper position sizing so that we didn't get shaken out because any one name got hit too hard. But we survived that, added a little bit more exposure over the last couple of days, and as always, stops in place. And some of these big gap up names are holding. We had Tesla, Decker's gapped up this morning. This is a leading retail stock. WDC, Western Digital, gapped up, but it's near the bottom of its range after the gap up. But we're as always putting pluses or minuses in the various columns for what's going on with the individual, not only names individually, but also what are the sectors doing, what our market cap size is doing, how is breadth, and then we let our stops keep us in the market or take us out of the market, because Protection has a dual mandate. When it's time to lighten up a little bit or get out of the way, we'll do it. But when it's time to grow with a healthy market, we'll certainly do that as well. A lot of people derisively say that people that try to time the market are always worried that the sky is falling, but we've got a set of rules to keep us in, as well as a set of rules to get us out, and that's as important, because you can be out and miss the losses, but if you're not participating in getting the gains when make hay when the sun is shining, so to speak, you've got to be able to do that as well.
Absolutely. So what does the team has? What are they going to talk about? I think Ted's going to talk about Tesla some more.
Let's go right over to Ted now, and he's got 4 slides. Alrighty. Let me get the first one up and take it away, Ted.
Don already walked the listeners through how we scaled into Tesla and did a fantastic job doing that. So I'll keep my Tesla portion shorter now because of Don's section, but I'm also going to review Bitcoin since I believe both these names are pertinent right now, with both of them setting up for longer term time frame breakouts as well as shorter term time frame. So I'm going to do what I did similar last week and go from the longest term time frame that I've looked at, which is the quarterly, also known as 3-month chart. And that's what we have on the screen here with Tesla. You see, you had that huge 1,000% plus move, multiple quarters green in a row, far back years ago in 2020. And as Dan said, leaders correct an average of 72%, and Tesla actually did just about that. And you can see a long-term volatility contraction pattern actually on the quarterly and monthly chart, which is on the bottom. And right now, we currently have an inside quarter. Taking out 271 would be the breakout over the previous quarter. And then on the monthly chart, you can see we took out the previous month's highs, and now we're testing that 271, which is the previous quarter's highs. And you can see that VCP more clarified on the monthly chart. So Don, if you can head over to the weekly and daily. He already talked about this in his section, but we'll just quickly go over it again since this is a great setup that we're looking at. And these don't come around often. And a basket of names I'm thinking of are Bitcoin, MSTR, which we talked about on previous podcasts, NVIDIA, SMCI earlier this year, gold as well. So as you can see, these types of setups don't come around often. And when they do come, we definitely have our eyes peeled and really try to get into these names. So as you can see, look at the weekly. That Ignite bar was obviously due to earnings. Don quickly touched on the earnings report, and I'll just add a couple things as well. Of course, we beat on earnings by about 13 cents. We came in at 72 cents versus 59 cents expected. And Elon and the team said that they expect 25% automobile growth in 2025. And we know that the Fed started cutting rates. They cut by 50 basis points, and it seems like we're going to get at least another 1 or 2 cuts by the end of the year. And declining interest rates significantly help with these cyclical sectors like automobile sales. Elon Musk also talked about more affordable models coming in 2025, a model that costs $30,000 or less. So that continues to fuel more revenue, continues to create a new revenue stream for Tesla, and it opens up the EV market to those that might be more skeptical of buying a higher end Tesla that costs $50,000, $60,000, $80,000. Some other things they talked about is full autonomy with FSD, with full self-driving expected next year. And actually, Tesla is already utilizing the robo-taxi network for employees in the San Francisco area. So that's pretty cool. And they said they're going to look to expand that into other areas of California and definitely Texas as well. And a big thing too was that their full self-driving FSD revenue hit 325 million this quarter, and the margins on that product itself is 90%, which is just extraordinary margins. It's very low cost, and as people adopt FSD, as FSD scales and becomes even better over time, more and more people are going to subscribe to that. So it's really interesting, the Tesla business model. Of course, you have the car sales, you have the energy storage, you have FSD, which is like a subscription model on the cars, and then you have the robo-taxi coming out and humanoid robots. And then finally, they talked about having a 50,000 H100 GPU in Gigafactory, Texas by the month end, and that will really help them with their machine learning and AI in developing the robo-taxi and humanoid robot. So just finally, quickly talking about the daily, Don already has talked about it, but we had a perfect textbook island bottom reversal. And what that means is you saw that gap down, that leaves a huge gap. And then we traded in that area for a few days to a week or two. And now on this earnings, we gapped up. And there's this huge just square box now, if you can maybe visualize that in that area. And oftentimes that just shows people are caught off guard and buyers are stepping up to the plate and rushing in again. And today we are seeing follow through action currently above that 265 key level. And the next one is really that last quarter's high at 271. And after that, 300 is another key level that extends all the way back to 2021. And once we break that, we're really in a nice uptrend. So going over to the next name, just quickly review the Bitcoin multi-time frame alignment as well. And we'll start off with the quarterly. Like once again, just a beautiful cup with handle. We are an inside quarter right now, and the key area now that I'm watching for is 70,000. And once we take that out, I do believe that all-time highs should come shortly. And if you go onto a monthly chart, we can visualize that handle a bit better. We had multiple undercut and reclaims of the 10-month moving average and the lows of the base. Just shows that there's supportive action. Weak hands are being shaken out. Strong hands are accumulating Bitcoin. And I saw a stat that there's an increasing number of wallets that haven't moved their Bitcoin out of their wallet onto exchanges, and that is increasing. And which just shows that the whales are accumulating Bitcoin. And yeah, the monthly looks great. We're above last month's highs. And now if we can go on to the weekly, we had a nice lower pivot breakout out of that 66,500 area. And we came up to around that 70,000 area, topped around found some resistance around 69,500. And this week so far, we tried pushing higher, but it's more of a consolidation week. We had a nice shakeout 3 days ago below 66,500. Once again, shaking out weak hands, and the buyers stepped up hard, reclaiming it the same day. And then yesterday we followed through, and today we have an inside day, which is just perfect action on the right side. And if you look at this base, you really start to see symmetry at a right side develop now. So maybe another week or two, maybe even the end of this week, we'll see what happens. But 70,000 is the key level, and that will be the breakout for Bitcoin. And then, yeah, so that is Tesla and Bitcoin's multi-time frame analysis. And I'll send it over to Connor now.
Yeah, we full disclosure, we own IBIT, which is the Bitcoin ETF for clients, and also another way to play it is the first stock that Connor's going to talk about, which is MicroStrategy, and their CEO, Michael Saylor, has been buying Bitcoin for years on their balance sheet and reaping the rewards. And there's a chart of MicroStrategy. Take it away, Connor.
Yep, thanks, Don. Yeah, so on the topic of MicroStrategies, last week I did a trade review. I talked about 2 winners and a loser, and MicroStrategy was one of the winners that I talked about that I'm still holding. So I thought it'd be a good time to follow up and what I'm seeing now and what I'm doing, especially because earnings are next Thursday. So basically, with the earlier buys that I showed in the video, for those, I just moving up my stop to each day's low. Something I found is that when a stock starts to get a lot of momentum and a lot of strength, just continuing to move your stop up to each day low can keep you in. And there's some good examples from this year of using that strategy. And then the other thing is, for the earlier buys, plan is to hold into earnings. And something we do at Revere is we have our earnings calculator. And basically, you plug in your max AUM loss, and then you calculate a 2 times ATR move that is expected on earnings. And that gives you the amount of size that, you could hold into earnings. So that's how I'm planning on figuring out the position size next week. And the implied move for earnings often changes. So it's best to get that number the day before, because it can be skewed if it's too far in advance. But this one continues to show great strength, and it's breaking out into new highs, relative strength line, new highs, and Bitcoin hasn't even broken out yet. So definitely showing a lot of strength versus Bitcoin. And then the next chart, Don, GEV. This was another one that I mentioned last Friday on the podcast, talking about how I handled it. And this one had a really strong earnings report. It actually dipped down to 258 pre-market on Thursday, which coincided with the 21-day. And hindsight, it's always 2020, but that would have been a good ad opportunity. But for this one, the cost is just over 200 a share. So trying this one with the 10-week moving average, and definitely on the radar to look to add more to this. It definitely is a little bit extended now, but as you know, some of the strongest stocks can stay extended for quite some time, and that's something that we've seen over the past month and a half, is the stronger stocks keep on getting stronger. And that brings me back to the point that Don mentioned earlier, is focus on buying charts that show they have the ability to move. We don't want to buy something and just be stuck in a range. Buy a stock when it's shown you through previous price action that it has the ability to move. And I think you stack the odds better in your favor. So with that said, I got 2 charts that I want to talk about today. First one is VST. It's going to be a quick, short segment, but just kind of talk about what I'm looking here as 2 potential ideas. So this one's kind of sitting at the danger point here, right? It had that very strong move. They had the news of some of these big companies investing in them and whatnot. And this is basically pulling back to the 21-day. You have a clear downtrend line, and basically you have very tight risk. If it breaks the 21-day, you're probably wrong. And it's getting super tight here. And one thing I like about this one is, you can argue the market's a little bit extended. A lot of the best leaders are extended. So when that happens, I like to resort to find names that were leading very strong, the upper 1% of stocks, and then trying to buy that first pullback to the 21-day. And that's what we're seeing on this name. And the utility stocks, that theme is still very present and strong. And then if you go to CEG, and this one is owned in Grotection as well, and a very similar look. Again, this is CEG's alternative energy theme. GEV, same theme as well, fantastic earnings. And this one's got a very similar chart pattern, consolidating right at the 21-day. And, the RS on lower volume, the RS is kind of moving sideways, declining, but given the strong move it had, it's kind of taking a well-deserved rest here. So definitely want to see this hold the 21-day, or it pretty much invalidates the ad setup. So we'll see, but I think those look interesting going into next week. And one thing I did note, not something we really talk about much on here, but options activity. Sometimes that can be a good thing to look. If something's getting a lot of bullish option flow, that could be a sign that people want in. And VST, which I just mentioned, that has a lot of bullish option flow for next week and beyond. So sometimes you can just stack the evidence in your favor and to build a little bit more conviction.
Great stuff, Connor. Good point about those charts, CEG and VST, looking absolutely like mirror images of each other with this lower volume pullback back to a reasonable spot. But like you said, if it doesn't hold that spot, this will go off our radar because that'll take it away from maintaining its short-term leadership position. And GEV, very obviously the big winner from earnings. And look at these forward numbers on it. Only a 64 PE, but 144% earnings growth next year. That's fantastic. And that's on the back of, very often you'll see something that runs strongly into earnings and then reports earnings is people were front running it and they cash out. Absolutely not the case. It had that shakeout, as Connor mentioned, after its earnings report. And that second day, people deciding, yeah, we can take this thing higher. Very impressive stocks, got to be at the top of anybody's list. And one way we'll be looking to possibly sneak into it is using, Connor owns it, by the way, but in Grotection, is using the 60-minute stochastic. You see every time it gets down here, this can't even get to where it's oversold on the 60-minute. Every time it gets near this 20 level, it bounces. So we won't buy it when it's extended here, but we're looking for one of these, the 60-minute stochastic cross to the bottom. That just means it's a momentum pause. You'll see price go sideways a little bit, and it's a low-risk entry on an extended stock. You can, because it should do exactly what you're seeing here. It should cross, and then price should continue to work its way higher. And if it doesn't, you've got a very easy stop out. And this is how we maximize our opportunity and minimize our risk, is tools like this. Great stuff, guys. Let's turn it on back over to Dan, and you can take us home.
Man, that was an awesome review of the markets, and it actually was a good highlight with the inflection point of Tesla going from a loser to a winner literally overnight. And that's why you have to be nimble and you have to have rules. And how do you get in if it already pops? That's kind of what we're talking about, folks. So do you have rules when you invest? Do you have rules to help you get in and to get out? But most importantly, so you don't get creamed? Do you have reviewers as an advisor? If not, why not? You should ask yourself. Otherwise, keep watching our stuff because it may still be able to help you even if you have your own advisor. If you have your own advisor, ask them what their sell discipline is. They should be able to articulate it. Folks, listen, if you learned something, if you liked what you heard, please tell a friend, tell a neighbor, just tell them to go up to revereasset.com in the upper right-hand corner. They hit the subscribe button. We'll send this podcast out, and our daily Market Insight video we do every night the market's open, short 10-minute video, and this podcast. You can also go to YouTube, just Your Money, search for Your Money, and you can get all of our stuff there. You can also call us old school at 855 Real Wealth, or just shoot me an email, dan@revereasset.com. We'll talk to you next week on Your Money. Not their money, your money.
It's not about how much you make in the markets, it's about how much you can keep.